to do this part of it because my company is a little unique in that we operate mobile money across a fairly diverse set of countries. So we operate in the United States, where you have lots of banking options and lots of people who have bank accounts and lots of merchants who accept more traditional payment vehicles like cards and checks. Also, we work in Kenya, the Silicon Valley of mobile money. So if you study Kenya and look at Kenya, it's the most advanced, developed mobile money market in the world that has the most adoption and most usage per capita. We also work in India, one of the most complicated regulatory environments for mobile money, and we live to tell about it. And then also in Senegal, which is West Africa, a very interesting part of Africa because it's only 4% of the population has a bank account. Also, there are 13 countries that share 2 central banks. So it represents a lot of opportunity for scale across the region. So that's why I think I was invited. I'm going to try today to give you an overview of mobile money implementations. What are some of the opportunities, as well as what are some of the challenges. I'm going to try to do it pretty quickly. And it's all about bringing people mobile financial services to empower their lives and work. A little history of me. I was a serial entrepreneur, and in 2000 I retired, never to work again, and moved from California, and was for a lot of reasons got involved in Washington, D.C., and was here working on fostering entrepreneurship in developing countries between 2000 and 2005. And I didn't live here full-time, but I lived here part-time. And it was through my connection with Washington, D.C. and a lot of the NGO and public sector work that I got interested in mobile money. It was early days, and I was in the DRC one time for one of my trips because I was helping an NGO raise money, and I was looking at their operation in Kinshasa. And it was there when I walked into a prepaid cell phone store, and it looked exactly like a bank. And it was that moment which sort of started me on a journey that ended up me starting the company in 2005 to go after this big opportunity of mobile money. My background before that was enterprise software and was building software for large banks and large payment companies. So I had technical experience, but this was the first time I set out to build a company that was really about a big global opportunity, a game changer, as well as was a financial service company that was enabled through technology. Okay. Now, we have different numbers, but I think this has to do with people over 13. We have 6.6 billion people that are potential users of mobile money. 5 billion of them already have cell phones, and I can't tell you how fast this number goes up. When I was in Kinshasa, there was only 1 billion phones in the world. When I arrived in India 3.5 years ago, there was only 100 million phones in India. Now those numbers, they change like that. The adoption rate of mobile is unprecedented in terms of bringing communication. It took 100 years for landlines to get to 80% of penetration in markets where they got there. It took mobile less than 17 years. So this is unprecedented adoption rates for communication services. My belief it will do the same thing for banking services. We in the world there's been a natural ceiling on traditional banking, branch banking, brick and mortar banking. That was extended a little bit through the internet, but essentially banking has struggled to reach all the people that need it, even in this country. And so what we see is that we have 1.6 billion bank accounts in the world. That's a little misleading. I think there's only about 1 billion people in the world who are fully served by traditional bank services. That means they have great access, they can take full advantage, and they also it is price appropriate for their lifestyle. So that means we have a situation where traditional banking has been limited in penetration, limited in serving communities, and now we're going to talk about technologies and approaches that are going to bridge that gap very quickly. I think within 5 years, we are going to transform the planet. It's already started in some countries like Kenya and India, and what you're going to see is it's going to start to be a wildfire around the planet, and we'll talk about what it takes to make that happen. But clearly, it can bring convenience to people who already have bank accounts, and it can bring service to people who don't have good access. And our philosophy is that it's important to serve both because people are connected. And banking and payments and financial services are a connected application. It's not a silo application. Why mobile money should be interesting to everybody in this room. There's people in the room that I know that are experts in mobile money, so they're here because they're part of the industry, the community. For some of the others of you, it's new, and your job is very different than a technology job or a financial service job. But why we should all be interested is that this fuels economic growth. We're already seeing in Kenya where the scale is happening, how it's driving growth in GDP, growth in small business, personal benefit to your personal life, and so it is supporting small business. It's supporting people's lives. It empowers people in small business, and I'll give you some examples. I'm going to go through the 3 countries, emerging markets that we're in, and we're going to talk about some of the empowerment, what is happening for small business, what's happening for people. Of course, it includes financial inclusion in Kenya, which is the most developed market. There are now 38%, after 2 years, there's 38% of households have access to mobile banking. That's in contrast with the entire probably five decades of branch banking, where you only got 22% of households. So this is a breakthrough in financial inclusion. And there's a lot of reasons for that. Why states should care, we talked, and the Undersecretary talked a bit about this, but it enhances security, and I mean security in the countries, because money's traceable. We don't talk about this a lot in the public, but what we do, what service providers do behind the scenes, we do this in every country. This is a regulated activity. We monitor what's going on with the money. We look for nefarious activity. We look for fraud. And we look for money laundering and terrorist transfers. So the fact that it's no longer cash and money is visible and it's in the banking system has a secondary benefit of enhanced security for the world. And that's at a society level. At a personal level, it enhances security. I have my money. It's in a safe place. It's in electronic form. It's less vulnerable from either people I don't know or people I know. It could be that it's in electronic form, so it's harder for my family to take all my pay and go out and use it for their own use. I can have it personally. So or it could be harder for some person who sees me on the street to steal it from me, and they know it's my payday. It helps commerce, and I'll give examples about that. I also believe in microfinance. Microfinance has achieved great results, but with low and medium technology. This is a high-tech platform for microfinance, which I think will create more scale for microfinance, and we're beginning to see that. And then empowering women. A lot of small business people around the world are women. This is an important tool for women, and so it's very empowering. So those are all the reasons why we should all care about mobile money. Now let's talk about it, why we care about it as a business person, because my company is going after the business opportunity of mobile money, which is big, just like mobile phones are a big business opportunity. If you look at the size, this was put together by JP Morgan Chase. When mobile money starts, it starts with one application area, but it quickly scales to multi-use because that just makes sense. Consumers want it, merchants want it to scale. So if you look at the opportunity areas, these are the volume opportunities in the different spaces. For retail payments, that can be traditional retail, like a supermarket, or small business, like the small corner shop. So the estimates is 10 trillion globally in volume. This is massive. If you think about how big that is, that's probably the same size. I don't have the exact figure about the card volume right now, but it's probably about the same size as the card solutions today. Check and cash replacement. This is paper. It's slow, requires transportation or mail. It's about 5 trillion for E&M commerce, which is growing, becoming the way people buy either from the phone or from the web. And then, of course, cross-border remittances is also a very large market, and I think we have some people this afternoon who are going to talk about that. So what's going on that's making this happen right now? One thing we've already talked about, which is that more people have phones, unprecedented access. 5 billion people have phones, soon to be 6 billion. Essentially, as mobile phones get rolled out in countries around the world, it gets to essentially 100% of the people that want to have it. It's hard to believe, but in Mumbai, for example, they claim that right now you've got 100% penetration in a city that has 9 million homeless people, or I'm not sure homeless is the right word, 9 million people that don't have really good access to housing, but they do have good access to mobile phones. So we're seeing this kind of very high penetration, and the phones are getting better and better. So they started with just voice, but more and more you're starting to see that low-end phone have more and more capability and power. The second thing that's happening, which may not be obvious to casual observers, is that the banking infrastructure behind the scenes is getting more sophisticated and it's getting more open. So when we started in the United States, we went to the ATM networks, which have existed for decades, and said, we want to use the ATM network for a different purpose than you're using it for. We want you to open up that interface and let us do mobile transactions into the ATM network. And they said, oh, no, we never do that, because they had never done it. But we are now doing that and interfacing with the ATM network, and that's not the only example. Those traditional infrastructures are beginning to get better and beginning to open up and allow new innovative solutions to connect into them. We've got a lot more innovation around social applications, which are driving changes in how people interact. And last but not least, you have a huge unmet need. In India, there are 12 million small businesses that need some sort of a better way to get paid. That's in contrast with, I think, the potential in India for traditional merchant solutions is about 1 million merchants, but you've got 12 million that are underserved and won't be served by merchant terminals and cards, but they will be served by mobile phones. So all those together are driving this. It is a network application. Think of this like more like the internet than like a bank branch application. The value's in the network. You want everybody connected. This is something that I think is so important. If you look at money transfer alone, which is a big part of the application of mobile money, a lot of the people that are the senders of money, they already have bank accounts. The money is in the bank, either because they got paid through direct deposit or they've been saving it so they can send it home. So these solutions have to embrace all the people, all the types of phones, all the types of networks, and all the types of banking situations. So this is, don't think of it as just about rural India and empowering mobile payments within that community. Think about it as a global scale. The values in their network, the more participants, the more merchants, the more consumers, the more banked, the more unbanked people that participate, the better. Now let's talk about how we view the world. This is a chart we made years ago to explain how we think. I think Jan talked about this, that people are different. Well, people are different, and they have different needs, and delivering solutions that allow all these people to participate requires a sensitivity to this. So, for example, a banked person already has a bank account, may have a credit card. And when they're using mobile money, they don't mind using a separate mobile account most of the time, but they want to connect it electronically to the products they already have. They're very financially literate. They probably have access to the internet. So for them, it's about convenience and connectivity when you're implementing mobile money. Many times, the US, this is very true, they want to get these products and services from a bank. That's who they have their relationship with. They're willing to consider third actors or different actors or independent actors or mobile network operators. But the research we have from those types of communities, wherever they are, they have a preference. I want to get this product from the State Bank of India. I want to get it from Equity Bank in Kenya. I want to get it from Citibank in the US. Because they already have that trusted relationship. So they're more likely to adopt if you can bring on the banks as a marketing channel. Underbanked, these are folks that may have access to bank account, may not have a transactional account. They may be still using banks as savings accounts, or they're using products and services, but they're overcharged. They may be afraid to get their money deposited into their bank account because they may be holding it. So they may not want to deposit in a traditional bank account. They may have it, but they may not prefer to use it for their day-to-day operation of their business or of their life. So for those folks, you want to create connectivity, but they're probably going to want a service. They're more likely to adopt it from a third-party actor, a retail partner, whether that be Walmart in the US or 7-Eleven or an equivalent vendor that's providing Western Union services. That's where they have retail relationships that may be preferable to a more traditional bank product. But last but not least is the unbanked. What I think is Kenya has shown us, and you see this in other places, in Philippines, you're seeing this in India, is that the unbanked is actually quite becoming very communication literate. And a lot of the successes with mobile banking is to take that communication relationship and leverage it into a financial relationship. And it's really easy to understand this. I have a prepaid phone. I go to a store, a corner store, and I bought my phone. I have a relationship there. I may go get some content from them. I definitely load my prepaid minutes from that. There's a small increment from that relationship to a relationship where I have prepaid money on my phone. And this time I go to the store, and instead of loading minutes, I'm loading money. That was a small step for people. And so they may not have understood a regular bank account and what a debit card was, but they could definitely understand loading value on the phone in the terms of minutes. Now they're going to load value in terms of money. They understood text messaging to their mother. And so it was simple. I send a message to them, now I can send money. So that small increment upon, they had the need, they had a pain point around money transfer or top up or bill pay, and they had a relationship, and so mobile money was introduced as a small step for them. They didn't have to go buy into a whole new financial offering that they didn't understand, maybe didn't want. They had to make a small step. I'm going to just say a word about regulation since we work in these 4 regulatory environments. All of them are different. There are commonalities. So there are some things you just have to do wherever you go around protecting the consumer, showing you're a viable service provider, protecting the security issues around money, personal security and economic security. But I can't tell you how different these 4 are. And one of the big issues that we faced, in India as the example, is sometimes the regulations aren't clear when you start. And if you don't know what you're going to be able to do, it really stops any implementation. Because how can you do anything if it's not clear what you're going to be able to do? So we spent about 2 years in India waiting and working and talking to the RBI before we could actually launch the service. So depending on where you are in the world, I think getting regulatory clarity and the guidelines or the central bank rules set is one of the most important things. Without that, it's going to really limit the ability to implement these systems. Within these countries, you've really got very different regulations. And so the service providers, the banks, the mobile network operators have to adjust their models based on what regulators want. I think there's kind of a common theme that you're seeing, that banks have to be involved, but exactly what their role is, regulators are going to weigh in differently around the world on what that is. I think one of the things we've learned is that our strength of starting in the US, having nationwide money transmitter licenses, being able to take deposits for others, really gave us an understanding of what we need to be prepared to do as we go around the world. And this is one of the biggest barriers to entry for people. There's a lot of technology companies who are coming and building piece parts or mobile wallets, but that's the tip of the iceberg. It's understanding the infrastructure behind it, the operational, the kind of treasury things, the kind of regulatory approval relationships are much more complicated than the software on the phone. Both are necessary, one's much more complicated. Okay, so in terms of mobile money solutions, the way to think about it is there's 30% of the problem is technology, and this represents the technology you have to think about. And that includes the client software on the phone. And the phone can be a very basic phone, and you could take it's called an SDK. So it's a small application burned on the SIM chip that you get from the mobile network operator. That's the simplest. Another version of that, which is a little bit different, is called USSD. But that uses a very basic phone, a small application. It's easily provisioned into the phone through the SIM chip. And then you can do feature phones, which are a little fancier, a little more complicated to provision the application, a little more expensive for the user. Smartphones, everybody loves smartphones. because you have really high-speed data to them. They're much more capable. More and more people are having them. And then they also need to be visible through other technology. So if I have a web application, social network, I'm going to be able to interact with them. So all of that is probably what most people think of as mobile money, because that's what you touch and feel. And that has to be a very, users, a lot of things Jan talked about, where you have to be sensitive to the user, they have to be able to use it. It has to be simple and compelling and powerful. Then you implement use cases, and those use cases can be, I can pay a bill, like a utility bill, a water bill. I can pay to a merchant. I can pay online, either on the phone, or I can do person-to-person. These are behind the scenes actually very complex to implement, and sometimes involve integration with existing systems or other merchants or other infrastructure. So that construction of those solutions can be quite complex behind the scenes. And then the rest of it is really about how you integrate with the world and make it more useful, how you integrate with banks, with retailers, with mobile network operators. That's about a third of it. The other third is how you set up the operations to manage the money. So this is a complex operational model. And then about a third is how do you get all the partners to work with you to deliver the solutions to consumers and create the value, the potential value. So about a third business relationship between all the different actors locally you need, a third internal operations for how you manage the money, and then a third technology. Some of the conditions that make, people talk about, for the people who know about Kenya, what you know is the stars aligned, it was the perfect conditions, and now you are seeing scale like you don't see anywhere in the world in terms of number of users and the volume of transactions. So what are the conditions you need to be thinking about? The first is the regulatory certainty. I'm pretty agnostic about what kind of regulations. Some people have strong feelings that it has to be a certain way or another. I'm less so and pretty agnostic. But there's got to be certainty. Next is you've got to create partnerships between banks and mobile network operators. They both are important actors. That is one of the biggest challenges, because depending on their point of view, they can be quite competitive, and they may also not know how to engage with each other. So that's an important part of it. Even in Kenya, where it's branded Safaricom or YUCash by Obopay, those are all, that's a mobile network operator delivered service, but behind the scenes, trust me, there's a bank. And over time, you're going to see more and more bank involvement with those systems. In India, it's by law, it's required to be a partnership, a retail partnership between banks and carriers. The other is that it's not just about the mobile phone. It's about the mobile phone distribution network. In India, there are 60,000, there's 1.3 billion people in India, 60,000 bank branches. And I don't know how many ATMs, not very many ATMs. At the same time, there's probably 1 million stores where you can buy either a mobile phone or mobile phone's top-up. You can add minutes to your phone. So what it's about is taking the retail reach, the retail footprint of the mobile network, and leveraging that to deliver branchless banking. That's as important as that technology component of mobile banking. And there's some people in the room from the World Bank who are experts in how do you leverage that retail distribution to light up parts of the world that are very hard for traditional banks to reach. We talked about the operational capacity and capability you need to build in the service providers. Banks have a lot to contribute to that, but they don't have everything. So you need either third parties or need to build capacity for the operational capabilities. Customer education and support. Customers will adopt, they will educate each other, teach each other, but you have to start it. And you have to start it by finding a pain point, having a good incremental strategy for how people get started in it and use it, and then you drive usage. But be prepared to think about customer education and support. Also broad device and coverage. You know, we think that it's all about smartphones and what's called GPRS, which is high-speed data services to the phone, because that's what the world we live in. But if you go to a place like India, you can't reach the 600 million phones unless you support a very low-end phone and a transport of a text message as a transport, not as a. So you're using a very low-end data network, just simple messages going back and forth to the phone, and a very basic phone. Because that's especially important to include the poor. Don't assume that in the next 2-3 years that people are going to have iPhones with GPRS services. Think a lot about how do I get reliable data services to the millions of phones that poor people have, or the people at the bottom of the pyramid have. I'm just going to talk for a second about 3 implementations. These are our implementations in 3 different emerging markets. I want to point out a couple of things about them because I think it's important to understand that it's not all going to look like Kenya. A lot of the attention to Kenya is, I think, confusing people that all markets are going to develop like that. India, regulations are very tight here. Banks have to have an active role in delivering. It's just recently that for small wallet sizes, banking correspondents can do cash loads and now recently cash unloads. But it's a limited product offering, and it has to be co-branded by a bank today. That may change, but today banks have to have a retail relationship. There's tremendous opportunity. You've got about 700 million adults, 600 million, I think we hit the 600 million mobile phone subscribers. Only 41% of the population is banked, and that is unbanked. That's misleading because a lot of people do not have transactional bank accounts. There's only a couple 100 million debit cards in India, so that's an indication. A lot of the bank accounts are savings accounts. The solution is being led by our solution is being led by the handset manufacturer to build a richer application on the phone. Also, there are 18 mobile carriers, but they have over 50% of the market, and they have 200,000 points of location to reach people in rural and urban India. The use case that is driving the initial adoption is a better way to top up your phone, and the second use case is bill pay. That's because money transfer will take a long time to reach all of India, the physical deployment. So it's going to start with those applications and then grow into money transfer. I now have 1 minute, so I'm going to do these real fast. Next one. Next one, East Africa, Kenya. Everybody who this is the fastest growing mobile carrier in Kenya. It's called YU. It's an Indian-based company. We are YU Cash by Obopay. They are following the leader. But what's interesting about this is it started with money transfer, but it's scaling to more sophisticated bank products, bill pay, more sophisticated payments. So it starts with one, but it quickly scales. People buy their phone subscription, and I think it's about 70% of the time sign up for a bank account at the same time. So there's great adoption here. It's one of the greatest case studies in mobile money, and the rest of us can learn from it. But the adoption is great, and the users are demanding more connections with bank products. So they want to know how this works with microfinance, so it's going very quickly into other use cases. Next is Senegal. It's a bank-led service. Here's an example. This is a great thing to understand. This is where a bank has said, I'm going to be the market maker for mobile money in this country and in other countries like that where they're present. So they're very aggressively going after this. They're starting with text messaging, but they're recruiting the mobile network operators to work with them. And they're focused on bill pay because people take 3 days out of their work to pay their water bill. 3 days. Travel day, stand in line day. They start at 6 o'clock in the morning. And travel home day. So that's the pain point they're going after. The water bills at the end of the month, you can watch the process. And those are farmers and people working in the rural areas have a lot of pain around that. That's how they're driving adoption. And the bank started it, and now they're bringing in they're using the retail reach that they have, adding the cable, and the water companies are actually becoming retail locations to onboard the customers. And then they are now partnering with a mobile carrier. They haven't announced it yet, but the mobile carrier is going to now include this application in the SDK, in the SIM chip. So I showed you those 3 because it's not all happening the same. But the pain point starts it, and then things grow from there. And it really does involve multiple actors to bring the infrastructure together as well as deliver the product to all the people that need it. If you're talking about, I'm going to take a few minutes. I know you're trying to get me off stage, but I want to talk about how to go to the underserved. Give you another minute. You have to think about the infrastructure. If you just tag this on to a regular bank account, the cost is too high. If you just add a regular debit card it's going to be too high for the poor. So having a very low cost model that may be cardless access to an ATM and a pooled account from a structure in the bank, that's going to drive down the costs, which is going to save money for the provider. Therefore, you can pass on a much lower price to the consumer. National ID is super important. In India, it's monsoon season. It's increased our cost of signing up customers by probably $1 or $2, which is a lot of money in India when you're trying to onboard hundreds of millions of customers, because people don't have good IDs. And so the driver's license are more likely wet, so when they get Xerox or copied, they're not going to be as successful. That national ID, lack of national ID in India is a boat anchor. Kenya is an example where they had the national ID that propelled the onboarding process, so you could go through the customer onboarding and a better documentation method. So national IDs are important. India is an example. They're putting lots of effort into building a national ID. It'll take years. Countries that do this will benefit in terms of lower cost onboarding of customers. Talked about the retail reach. I think I talked about all these other things, but the two is the model matters to drive down the cost, and national ID. Those two things are incredibly important. What the State Department can do, besides what they said they could do, they were talking about, is they can really help bring the actors together and start talking, get the conversations going and the dialogues going. They can help educate about regulations to speed up the regulatory certainty in the markets. They can help service providers like us. I've been asked to go to Pakistan, to Libya, to Afghanistan. Those are the kind of things where I couldn't possibly think about doing that without support from the government. So if the desire is to have a trusted US-based actor in those countries, we're going to need help from the US government to make that bridge, because it's really hard for us to do it without some help. Also, I think there's some anti-competitive behavior. There's a lot of things going on to stifle innovation in this space. And understanding what those behaviors are and preventing them from happening will foster innovation and more service providers, more competition, more solutions for the poor. Thank you.